I think consistency does matter though. 70% of what salespeople do every single day is very, very similar. There is no replacement. You could be incredibly qualitative about exercises in the gym. You could be the very best at every single exercise, but if you just don't show up to the gym with a frequency, it won't work.
Hello, everyone, and welcome to another episode of CBS Spotlight. If you're here by mistake, you're in the right place now. I am Eric Alvarado, along with my co-host, Mr. Ted Hikes, and we are your friendly guide to the world of insurance and wealth management. And today, ladies and gentlemen, we have an industry heavyweight on the show with us. He is the head of insurance over at John Hancock and has had multiple leadership roles in his career and is just a fine human being. Mr. Hector Martinez. Heck, welcome. Did I miss anything?
I don't think so, although this might be the first time I've ever been called a heavyweight. But I do appreciate you, Eric and Ted, having me on the show. It's a blessing to be here with you guys. Thank you again for having me.
We're very excited. Well, Hector, we want to start with a little bit of background, let the folks on the podcast or that are listening here get to know you a little bit. So you've obviously had a very impressive career in the insurance space. Can you walk us through kind of your journey from your early career, starting out maybe at Lehigh, to where you are today as your current role as head of insurance for John Hancock?
Ted, I appreciate it. And it's been coming up on a 30-year journey now. And in that 30 years, I've really only had 4 places that I called home. So after having graduated from Lehigh University in 1995 with a degree in management and economics, one of the things that I was thinking about was how do I get exposed to multiple parts of the industry to get a better idea of what I wanted to do and what interested me. And so there were sort of 2 things that I could do. One of them was sales and the other one was consulting. And I loved the idea, mostly because the consulting thing was a foreign aspect to me. Sales sort of made sense to me, specifically business to business, because I could meet different business owners, different industries, et cetera. So I started my career at ADP, and where there was about a 50% turnover rate the first year or 2. It was like the old copier sales type setup. But the reality is that it was a fantastic training program. And so I spent 10 years there, first in sales and then leading sales teams. And my last stint there, I was building what they called a PEO division in the New Jersey tri-state area, alongside with a few other folks at ADP. And at that time, there was a company that spun out, maybe right before that spun out of ADP called Bicis. And Bicis started to buy brokerage general agencies in the life insurance space. And the president of ADP became the CEO of Bicis. And so they started to recruit people from ADP, from industry companies like Prudential, et cetera, that came over to try to standardize what then became Crump, Life Insurance Services. And I spent 16 years over at Crump running sales for them. I was a chief distribution officer for them. And that was my first foray into life insurance. At ADP, it was health insurance, workers' compensation, et cetera. But the true life insurance space started at Bicis and Crump. From there, 16 years as a client of the carriers, I fell in love with what our products can do and what our solutions brought to clients. And even my time at Crump, I thought to myself, boy, if we could get in front of as many advisors as we possibly can and create avenues in which they can engage their clients and have this as a solution for what they offer their clients and the problems they're trying to solve, I just became fascinated with doing that with more and more people, which brought me to Equitable. I ran the life business for Equitable for 3 years. And why I went there was, again, being fascinated with what our solutions can do. The idea of partnering with a team of people, and Equitable had a tremendous team of people that woke up every day and tried to create solutions for tomorrow's problems. And it was just neat to be on that side of the equation as a manufacturer and doing exactly that. Now, I've been familiar with John Hancock since I came into the life insurance space in 2005. If you even rewind back in 1999, my first policy when I was having my daughter was from John Hancock. So I've been familiar with John Hancock for a long time.
Full circle.
Full circle, exactly. But the idea of coming over to John Hancock, where specifically their focus on longevity and turning the way that we own life insurance around and flipping it sort of on its head was fascinating. When I think about our products and solutions, they don't just work for the people that you love, but they work for you while you're alive. And the prospect of joining this team to do exactly that, bring those solutions to advisors so that they can leverage them for their clients, was just too much. So I've been here for almost a year. I say almost a year. It's been about 9 months. And it's been a wonderful journey. I feel like it's a coming home party because I know so many of the people here. But that's my journey to where I am right now.
So Hector, having worked in leadership roles at both Equitable and Crump Life Insurance Services, how did those experiences shape your approach to driving growth and the innovation over at John Hancock?
I think in different ways. So the first part, I mentioned my time at Bisis and at Crump. I think the thing about that made that sort of shaped the way I think today, at least the lens with which I look at the industry a little bit, is I lean advisor. I start thinking about what it takes for an agent and or an advisor to understand the needs for a client. And then from that conversation, especially those that do more than just life insurance, right? That, the advisors today sit at the intersection as most of the financial decisions that clients are making. So I lean a lot into what is an advisor doing when they're in front of their client, and how do I then create a bridge between the conversation they're having with their client, the problems they're looking to solve with their client, and how they can tap into insurance as a potential solution. So I think about creating value at the advisor level. That's critical. And I think about that because if you create value just at the consumer level, you haven't made it easy or easier for the advisor, who really is the one that's driving that decision-making with the client, partnering with the client to make choices across all the different financial instruments. You've got to arm the advisor. So I think advisor, that I think was mostly through Crump, maybe a little bit from my time at ADP and that sales end, where we try to think about listening to what the consumer is saying and then trying to drive a solution that solves that need. I think at Equitable and even here at John Hancock, most of what I think about is now we're creating the product. We are creating the solution. We are creating the purchase experience. We're creating the ownership experience. With the knowledge of that advisor, now how do you retrofit what's a centuries old industry and make it accessible to the people that are working in today's environment? People consume data differently. People consume and buy products differently. How do you make our products accessible? And so I think bringing that lens of advisor over to the carrier side, I think is really helpful.
So Hector, as someone who has held roles such as chief sales officer and head of protection solutions, what are some of the key lessons that you've learned about leading large, diverse teams within the insurance space?
Yeah. It's probably less about the insurance space as much as it is large, diverse sales forces. I think a couple of things. Crump, Equitable, and even here at John Hancock, one of the things that you'll notice is that there is no monolith. There is no one way. If you step into an office, if you step into an advisor's office, an RIA, an institution, each one of them is serving a group of clients, and their conversations could be very different from one entity to the other. So the key is, the biggest lesson I have is listening a lot more. We all have this perspective, and the lens that we look at things through happens to be formed by our experiences. If we could take a step back and listen to what, number one, the advisor is doing every single day with their client, and think about the problems they're trying to solve, and really, really work hard at trying to think about how do you create connectivity between what they're doing every single day and what we do. That's where the magic happens. So leading large sales forces is about trying to understand what clients are they going after, and not giving them, here's what you need to do, but rather let's listen to what you're doing and then cater our solutions across the needs that they're trying to solve. I think consistency does matter, though. 70% of what salespeople do every single day is very, very similar. There is no replacement. You could be incredibly qualitative about exercises in the gym. You could be the very best at every single exercise, but if you just don't show up to the gym with a frequency, it won't work. Yeah. It's the same thing with sales. So leading a large sales force is trying to find out what the common 70% is, making sure you manage those every single day, making sure people are aware and appreciate those. And then the 30% is the customization that I just talked about in delivering those solutions. So I think it's sort of a balance between those.
Makes sense. Yep.
Great insight. Thank you.
What role, I guess, do you see John Hancock playing in the broader evolution of the insurance industry? Especially as it continues to lead in behavioral insurance.
I appreciate that question, and this is one that is probably one of the reasons why, the biggest reasons why I joined John Hancock. Our products, like most other solutions in the insurance space, provide the benefits that you would imagine: a death benefit and/or the tax preferred treatment of inside buildup or cash accumulation, however you'd like to look at it and however you'd like to use it. But we are all in on behavioral insurance, and we believe that it is the future of the industry. Outside of, I've heard Brooks say this, our CEO, and I think it's one of the best quotes I've heard him say, amongst others. He said something about, besides the people that love you most, there's almost no one that's more interested in you living longer than your life insurance company. We stand to gain the most. Right? I mean, we all benefit from that. So what better alignment for an insurer who stands to gain the most from people living longer, living healthier, living better lives? And we just, as an industry, think that we all have to play an active role in taking steps in that direction to not just hope people live longer, but to actually play an active role and run alongside you and help you to do exactly that.
It's interesting, Hector, because it seems so obvious, right? Like, this seems like something that the life insurance industry should have been doing since the beginning of the time. I'm just curious, how do you think, technology plays a role in your ability as an insurance carrier to really effectively impact people's lives?
So there's two things. I think we are the beneficiaries of a lot of innovation by a lot of companies. You think about Apple, you think about Fitbit, you think about Garmin. I mean, there's a whole wave of, I say, a tsunami of wellness initiatives. I was on public transportation the other day going into New York City. And one of the things I did was I just observed how many people had an active wearable, so not a regular watch. And I just counted, and these are commuters into New York City, and 79% of the people on that train had a wearable. And so why I say that is that people are now interested. So they are getting the devices that drive that activity, drive that connectivity to the activity data that leads to the feedback they would need to make sure that they're living, longer, healthier, better, or they're at least taking steps to live longer, healthier, better. I would say the other place that technology plays a role, I think you're going to see generative AI play a significant role in the insurance space, and not in the way that most people would jump to conclusions like, oh gosh, you're going to be able to make underwriting decisions. That's probably less of what I'm talking about, and more about there's a myriad of things that you can you take redundancies and make them everyday tasks that you could systematize and allow for salespeople, allow for underwriters, allow for case managers, and then allow for advisors to take the next best action. And so I think technology, I think digitization, and I think this innovation that we're privy to, I think is going to allow us to continue to help make our products more and more accessible, if we allow it. I think that's one of those things that somebody said, is AI going to take my job? Something like that. And I don't think AI will take anybody's job, but somebody who knows how to leverage AI will. So we have to, as an industry, start to take up that mantra.
Hector, that was fantastic stuff. Thank you so much for your time, your insights, and we really appreciate John Hancock and the partnership that we have with CBS and Hancock. For everyone out there, I am Eric Alvarado. This is Ted Hikes. And we, are your friendly conversation about insurance and wealth advising come together. So thank you for tuning in. If you found this information helpful, please don't forget to like and subscribe, and we'll see you all next time. Thank you so much.
Thank you, guys.
Thanks, Hack. Appreciate you. Thanks, Eric.